In 2016, the area lost its last remaining branch.
Our Huson reports today that big banks have been quietly cutting jobs and more layoffs could be coming.
The countdown is on. In less than a month, these 3 Target stores in the Bay Area will all be shut down. And the reason? It's something we're seeing far too often.
The U.S. government is painting a rosy picture of the economy, boasting about a 4.9% growth rate in the last quarter. According to the Department of Treasury, the economy is outperforming expectations, with increased economic output, market resilience, and slowing inflation. This all sounds great, right? Still, for the average American, things don't feel so good. Despite what the government says, a lot of Americans are struggling to make ends meet. Banks are closing more often and stores are shutting down branches. So if the economy is doing so well, why is this all happening? In 2023, almost 1,500 bank branches in America closed permanently. In 2023 alone, 2 banking giants, PNC Financial Services Group and U.S. Bank, closed 1 in 10 of their branches. This marks the 14th consecutive year of a significant decrease in the number of banks on our streets. The surge in branch closures is fueled by a shift in the banking industry toward online services over traditional locations. While this shift is evident across the board, it disproportionately affects low-income neighborhoods and rural areas. The troubling reality is that the high street banking network is disappearing before our very eyes. Many areas are now grappling with what's known as banking deserts, where access to essential banking services becomes increasingly challenging. This poses difficulties for individuals in these communities who rely on local branches for financial resources and support. Financial institutions are embracing digital platforms and reducing physical presence to stay afloat, but this comes at a cost, impacting both customers and employees. With fewer high street banks, job opportunities dwindle. The Financial Times recently reported 20 of the world's biggest banks cut at least 61,905 jobs in 2023, marking one of the worst periods for cuts since the 2007 crisis. This has significantly contributed to the U.S. employment crisis, with job losses totaling a staggering 3 million across all sectors from December 2022 to December 2023. At the same time, it looks as though the U.S. economy has added a total of 2.7 million jobs in 2023, which could signal that things aren't as bad as they may seem originally. We will just have to wait and see how things continue to progress over time. The challenges in the U.S. financial landscape don't end with bank closures. There's also a concerning decline in the number of loans issued by U.S. banks. According to data from the St. Louis Federal Reserve Bank, the annualized growth rate of loans and leases from commercial banks has plummeted to a mere 0.3%. This is a far cry from the 3.1% annualized inflation rate observed in November of the previous year. Loans are the lifeblood of economic growth. When consumers stop borrowing money from banks, it puts the brakes on the wheels of the economy, signaling turbulent times ahead. Various factors such as economic uncertainties, regulatory pressures, and the aftermath of major global events have added strain to the viability of many banking institutions. The closure of banks not only affects the local communities they serve, but also raises concerns about the broader implications for the stability of the U.S. financial system. This disheartening story of job losses, closures, and uncertainty extends to the retail industry. The year 2023 witnessed a wave of retailers closing their stores and filing for bankruptcy. Fears of an impending recession are believed to be a driving force behind these closures. Even major U.S. brands, including the colossal Nike, are feeling the effects of America's economic challenges. Nike, a leader in the retail industry, is planning drastic cost-cutting measures amounting to a staggering $2 billion in an effort to weather these unstable times. The implications are significant. If a powerhouse like Nike is forced to make such deep cuts, smaller and less robust businesses face even bleaker prospects. More and more companies are facing serious financial problems, and this is causing them to declare bankruptcy and shut down their stores. Household names like Bed Bath & Beyond, Foot Locker, and Rite Aid have not been spared. Bed Bath & Beyond filed for bankruptcy in early 2023, closing all 896 of its stores. Foot Locker, a giant in athletic footwear, announced plans to shut as many as 400 of its flagship stores by 2026. Even pharmacy chains, once considered stable, are facing the storm. Rite Aid, which once boasted over 2,000 stores in the U.S., recently filed for bankruptcy, signaling mass closures. This once thriving pharmacy company now anticipates generating about $680 million in losses. Major American institutions, including Target, Gap, Walmart, and Macy's, have also announced closures. This all-encompassing wave of economic turmoil is sweeping through every sector, showing little sign of letting up. The impact is profound, reaching beyond individual companies and affecting the very fabric of consumerism globally. The domino effect of closures and bankruptcies paints a gloomy picture, contradicting all the government claims. At this point, let's also debunk a common misconception. The decline in the traditional high street shopping experience is not entirely because of the rise in popularity of online shopping. While online retailers experienced a surge in popularity during the COVID-19 pandemic, with consumers resorting to making purchases from the safety of their homes, the euphoria has dwindled. Many online retailers are now grappling with their own set of challenges. Take Zulily, a Washington-based online retailer, for example. Last year, it terminated the employment of over 800 employees and shockingly declared a going-out-of-business sale on December 9th. This unexpected turn of events occurred just 7 months after the company changed ownership. Zulily found itself in a demanding business environment, struggling with operational challenges such as rising costs, supply chain problems, and drastic shifts in consumer spending habits. Running a retail business today is tougher than ever. The relentless financial squeeze is felt by both online and offline retailers, navigating a market that has become increasingly unpredictable and challenging. Escalating costs and decreasing consumer spending are pushing many retailers to the brink of financial difficulty. The current landscape offers little room for error, putting companies under immense pressure. The root of the problem lies in the fact that the average American no longer enjoys the same level of disposable income as before. The cost of living in America has been on a relentless upward trajectory, presenting significant challenges for individuals and families across the nation. So why are retailers and banks struggling more than ever? Housing costs have skyrocketed, making home ownership increasingly elusive for many. Rental prices have reached unprecedented levels. Essential expenses such as healthcare, education, and groceries have spiraled out of control, placing a strain on household budgets. The rising costs of energy, transportation, and other daily necessities compound the financial misery for citizens. The gap between income levels and the soaring cost of living has become a pressing concern. In June 2022, the monthly inflation rate peaked at 9.1%, contributing to an annual inflation figure of 8%, the highest in several decades. By September 2022, 34% of U.S. consumers were expressing difficulties in meeting their financial obligations. This confluence of high inflation rates and a significant proportion of the population facing financial challenges highlights the profound impact of economic fluctuations on the daily lives of Americans. The average American is grappling with an economic reality where their hard-earned money doesn't stretch as far as it used to. It's becoming increasingly challenging for individuals and families to make ends meet. The ripple effects of this financial strain are felt across various sectors, from housing and education to daily necessities, creating a landscape where retailers and banks are caught in the crossfire of economic adversity. America seems to be caught in a deadly economic cycle where wages are falling behind the rapid pace of inflation. As the cost of living continues to climb, disposable income is shrinking. In turn, consumers are holding back on spending and avoiding bank loans for fear of not being able to repay them. This has created a dire situation for retailers and high street banks struggling to survive in the face of this cataclysmic shift in consumer spending habits. Many people wonder why the government insists on painting a picture of a thriving economy when the reality on the ground is starkly different. One obvious reason could be that the government has a political motive. They want your vote. A strong economy is synonymous with a successful government, and a successful government is a popular one. The perceived ability to guide the nation towards global economic success becomes a strong political tool, projecting an image that can translate into electoral support. However, beneath this veneer of economic success lies a stark reality for many Americans. Affordability challenges persist, with individuals struggling to meet basic needs such as food, heating, and healthcare. This harsh reality casts shadows over the rosy portrayal of economic well-being, especially as the gap widens between the economic elite and the struggling lower class. Skepticism grows regarding the reality of this apparent economic success as more Americans question whether the touted prosperity is truly benefiting everyone. Looking ahead, many believe that the signs are clear, pointing to the possibility of another financial crash in 2024. This potential crisis could echo the challenges faced by U.S. citizens in the 2007 financial crash. Despite political assurances, the truth is that the U.S. economy is navigating one of its most challenging periods in recent history. There is a growing foresight among citizens who can envision the total collapse of the economy, signaling the end of the once vibrant American high street. With the past in mind and uncertainty in the air, everyone's wondering if we're headed for rough waters ahead. The fear of another economic meltdown is real, casting a shadow over our hopes for a stable tomorrow. If you want to learn more about the economic collapse everyone is fearing, click the video on screen now, where we reveal the shocking truth behind the 2023 housing market crash.